The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 27th day of April. Gosh, April's almost wrapping up. So the S&P right now, the futures are down 6 at 26.68. This is very interesting. Look, there it is. Within the context of the market, what I said to subscribers to my opening call this morning is that based on this 120-minute chart, there's a good chance that we stay in a trading band because we've made the cup formation. Now comes this kind of handle. The handle looked like it was extending a little much. So it's still extending, and it's 26.68. And on the candle itself, what I'd said is anything below 26, I believe I said 57, 59, yeah, 59 to 57, would start to see even weaker action. But we haven't closed there. We've hit the low part, made that little cup formation, the handle formation. Now it's trying to get back into the range. I just think right now that a lot of work to the upside. We were in a very oversold condition, meaning that the technicals were at levels where you could expect some kind of a bounce. Certainly with the news last night. Now I want to go through that. So the news last night, incredible earnings reports. Today should have been probably a Dow up 350. The Qs should have been up even stronger than that, and the S&P should have been up even stronger than the Dow, less than the S&P, less than the Qs. However, within the context of what I'm looking at, I don't really see a change yet in the overview that I have. That this is a consolidation that started on January the 26th in the Dow and the S&P, a little later in the Qs, a little later because of the rotation through highs. Remember, lows are often made within a couple of days of one another. Remember March the 6th of 2009, the Dow, and March the 9th was the S&P low, and almost all the indices at that point had made their low, and they had the spectacular rally that's going on today. That is in the overall picture of a mega bull market. Now, what's really interesting is that within looking at the context of the different time frames, let me show you something here. INDU. The Dow, which is a little weaker than the S&P, it's down 35, minus 0.15%. The S&P is up 0.07, up 196. The Dow MACD, the moving average convergence divergence, has created, I call this the dolphin look. You see the way that the green line, the fast moving average of the MACD, it's called the 9-period differential. Look at the way it's rallied, and then it's flattened out. Yesterday's big move to the upside did nothing for it. It just stuck like glue to the red line, the slow moving average, that 9-period exponential differential is called. And the stochastic is still actually quite poor. It's trying to rally. On balance, volume represented very well the price movement to the upside. It's made a nice V-shaped pattern. However, it's still stuck in the range. And what I've been saying for quite some time is that these H patterns, they can go to a lowercase m pattern. Remember, I drew the template in here way back. The arch formations, making a second arch formation. This is critical. And that says unless there's a move above 24,900. No. Unless there's a close above 24,900, there's a real good chance that this lowercase h, because the cyclicals are so weak, could actually be a failure pattern. It doesn't mean to say that it's going to break below 23,344 just yet, but yeah, look, it's stuck in this range. It's stuck to that 9-period moving average. So make it real simple. Consolidation continues in the key indices, the Dow and the S&P, and that would include the New York Stock Exchange as well. In the weekly chart, you've got a lowercase h that's trying to make an M, the lowercase m as well. The monthly chart is still good. The 120-minute chart, as in a leg B, made a peak B. It's kind of stuck in this range. Let's go on, and we'll look at the different indices. Yes, because it's the end of the week. We want to be preparing. Tomorrow, I start sending out for my subscribers to my opening call. Monday's newsletter, I start sending out the charts Saturday. Why? Because there is so much going on. And what's really important about so much going on, it means that there's sector rotation. And look, sector rotation with the S&P stuck in the same range. Let me just draw this trend line. You'll see it's a really important trend line from the top then, that last peak D to that doji candle. And that says that unless the S&P can close above 26, I think it was 83, 26.89 by about Tuesday or Wednesday of this week, we just kind of stuck in this range. We don't have to break down, but we don't have to break out. Here comes the QQQ. So here's the fascination. You see this downtrend line. There was an island reversal. 175.21 was the all-time high, the 13th of March. I got a lovely signal, sell signal right there. That peak D, 174.40, I think it was. The high was all-time high was 175.21. Now look what's going on. Hits this trend line, hits the 200-period exponential moving average, tries to bounce, goes to 166 from 153, 22 points down. And then it goes, what is that, 13 points higher. And then it stalls. And this rally today that looked fantastic last night and this morning, they must have been covering, shorting, everything they could. And what happens, it opens at the high and closes, we don't know. But so far, it's more towards the low than the high. This is not good action. And here's the fascination. Look at Amazon. Amazon makes its leg D a gap up leg D on a Friday. I've gone through this for years and years and years. I'm always a little cautious when I see something go to, especially an all-time high in the daily chart at leg D. The last one went from 17.54 on the 13th of March. That peak D in Amazon, Chapman wave reversal there, plunged down to the 1340s, 1351 was it? 1352, and rallies back up and gaps up to a leg D, and now we're way off the high. Leg D, I'm treating this as a leg D in the weekly chart, and a leg E in the monthly. And what it's saying to me is, that doesn't mean to say just because you've got these particular notations that, oh my goodness, this is the end of Amazon. What it does say is, if Amazon is not able to take out, this is a real simple thing, it's kind of a rule of thumb. If Amazon is not able to take out the 1638.10 high that was made this morning, a week from today, in other words, given a full week, if it hasn't closed above, it's not able to, it's no good to just pop up. It has to close above 1638.10. If it does that, that is really good action, especially if it does it without taking out today's low of 1571.77. So just keep it in mind. Intel, part of the Dow, part of the NASDAQ, QQQ 100. Now look at this. The leg D, it wasn't a gap up, but it is a very strong D. It goes from, opens at 55.44. Yesterday it closes at 53.05. Today gaps up, goes to 55.79. Now it's trading towards the low end of this Chapman wave falling axe breakout pattern. I'll talk about that when we get back. There's a lot to talk about today. No need to rush through things. I'm trying to prepare because we're trying to get ready for May. Very important month, May. I'll be right back. Basil Chapman, Taiki Ignition South.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. So in the context of the markets, look at the SMHs, the Semiconductor Index. Just Intel, most fantastic earnings report. The semiconductors blasted the upside yesterday, but hey, wait a minute. Peak D at 114.55 in the Chap Wave on the 13th of March. Remember, the fourth highest peak. Peak D is the one that we always watch so closely. It can go higher, but D is where it starts to kick in. And what happens is it plunges down to the low of 3 days ago of 95.47. 20 points, that's huge. So it's rallying, and it's rallying. But wait a minute, it only rallied above the 9-period exponential moving average and now is below it. Look at the weekly chart. It's got that Eiffel Tower straight up, straight down to a peak F. That should have been an inverted hat, that V-shaped pattern right there. And look, we've got a little problem. The weekly chart, technicals, the MACD is horrible. The stochastic is terrible at 35%. The monthly chart is still very good, but everything is turning down from what? A peak D. I contend that the news yesterday was belated news, and that I would not be surprised if the earnings, I shouldn't even talk about earnings, no, but I would not be surprised if there's a slowdown in the semiconductor area that's already unfolding, and that's kind of what the market is saying. Why? Because I believe that yesterday's news should have come towards the 110, 112 area, not in the 95s. It's already been for 2 weeks now, I'm sorry, for 6 weeks now, under pressure. So it seems to me that the SMHs are what we need to keep our eyes on, the Semiconductor Market Vectors Index, or ETF. What's really important about this is that for the first time, the MACD in the weekly chart is starting to turn down. It hasn't crossed negative. And also, the stochastic is at 83%. Remember, for a year, over a year, it's been up in the 95 area. Really strong. I'm watching this very closely. I'm not saying it has to collapse and break down. I'm saying I think it's under pressure and that there's going to be some reflex action or inflection action that permeates the QQQs, the NDX 100. So that's what I've said. Now let's just watch this closely. A close below 94 in the next week would be very negative. the close in the 104s. I'm not sure how it's going to do that, but if it does that, I'm going to be very impressed, at least for the shorter term. Okay, now we need to get to IWM. IWM right now is trading down 50 cents, 154. Remember, just nothing to see here, folks. That's my impression of the Russell 2000. Hasn't broken upside, hasn't at all broken to the downside. Levels to watch, 156.30 starts to trade there for a day. I'm impressed. It's at 154.39, trading in the 152.30s or lower. Not impressed. Just keep it as simple as possible. All right, we've been waiting for this. Here we go. I'm going to show you the TLT. The TLT right now gapped up very sharply. It's up 83 cents at 118.81. The H pattern in the weekly chart said that the 116.51 low that was made about 6 or 8 weeks ago has held. Nice bounce. Look at the weekly chart, the monthly chart, the lowercase h. This lowercase h portends a test at some point of the 116s, and it's trading at 118.80 right now. And if it closes below 116 for 2 consecutive months, yields are going to go quite a lot higher. Okay, now we can go to the yields. Oh, wait, a question about the TBT. The question was, where can I add to the TBT? Have patience. This, there's at 38.09, down 54 cents. I'm watching real closely the 37.70 to 37.20 area. If it actually gets there by next week, that could mean that yields are going to pull back as the TLT rallies, as money comes from the shakiness of equities into the so-called security of bonds. That's just the way I'm looking at it. Could be completely wrong. There we go. So now I have to say, where is gold? Gold is trading right now up 4, let's call it 5, at 13.22. Nice little bounce, testing a second day in a row, testing the 200-period exponential moving average. MACD is very negative. Stochastics at 9%, single digits. It's going to take a lot to get it back to the teens. And the weekly chart is held quite nicely, but at 13.22, if gold starts to trade in the 13.12s at any point in the next 2 sessions, including Sunday, so it's 2.5 sessions, that'll be a big negative. If there's a bounce, the bounce should come to 13.33, the 9-period exponential moving average. Holding quite nicely, and that's what I've been saying. I don't see gold as a major short or anything. I do see gold as in a range, and that range is well-defined, and silver also getting back into the range. It broke out. That, I think, was short covering, and at 16.49, down 0.07. All I can say is that silver doesn't look great. It's just kind of stuck towards the lower end of the range. Better hold 16.20 over the coming 2 weeks. Otherwise, that's going to be a problem. It looks like it might. However, if you look at the dollar, screamed to the upside early this morning. It ran to 91.99, just off the 92.20 200-period exponential moving average. I don't know if I can do it. It's Technical Friday. Let's do that. What I discussed was moving averages are just like candles or gaps. Treated as any iconic visual thing. It could be measured as well, so it could be a mathematical thing. But you only need it when you need it. Did I even have to think about the 200-period exponential moving average in the daily chart when the dollar was trading at 91.64 on the way down, or at 88.25, the low that was made on the 16th of February? No, because it was so far away. But as you get closer, as you break resistance, as you get into candles of importance, look at those red candles where it just tumbled to the downside. Look at that horizontal line that I've drawn in, very important key line at about 92.70. Hey, wait a minute. The MACD is steady as a rock at 93%. So the stochastic is, after a V-shaped turnaround, is up at 93%. This is a high. It's probably an all-time high over the past 6 months in the stochastic. The MACD is looking very good. I think that that's one of the big issues here. You've got yields that have broken out to levels that weren't expected by many people. You've got the dollar breaking out, and what is it doing to stocks like J&J, Johnson & Johnson? Stuck at the lower end of its range, not doing very much. What is it doing to, say, a Coca-Cola? Let me see what it's doing to a Coca-Cola. Whoa, Nice move up today, but kind of in the lower part of its range. Yeah, the multinationals, it's a big deal. Okay, let's get back to our story. So what we were doing, the question is the TBT. Well, let me show you something here. In the context of the market, this 32.21 high in the weekly TYX, the 30-year T-bond yield, back, I should have put a date in it, right? Well, that was the week of the 23rd of February. Yesterday, we went to, was it yesterday? I think it was yesterday. We went to 32.19, 2 cents off. Wait, I have to correct that. 32.19, 2 cents off. Could this be a Chapman Wave Peak C1 with the equivalent of a D being missed by 3 cents, a peak C2, which says that this leg E in the 10-year and leg F in the 5-year are about to digest gains? I'll talk about the implications when we get back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So let's just finish this up. I've got a ton of questions. I really want to get to them. It's Technical Friday, so let's get to those questions. But first, this TYX, if there is a lower price, lower than 32.90 next week, that's one thing. But if at any point next week we start to trade at 31.30 right now, if we start to see the 30-year trading at 30.70 or lower, if we start to see the 10-year trading at 2.959, starts to trade at 228.65, and if the 5-year, the cyan one, the FVX, which is trading at 28.02 right now, if it starts to trade at 27.35 or lower, I think we've made a short-term top, and I think the market then becomes vulnerable. That's just the way I'm looking at it right now. Those fantastic earnings and everything, they're going to be important a little later. That's kind of history. So we have to deal with that. So let's get out of this, and I want to show you something else that's very interesting. If you go to a high-grade copper, down sharply, it was down sharply earlier. Now it is cascading. I said yesterday I thought that the 3.10 area should hold, but if the 307 9-period moving average gets taken out, we can add that to our list of worries as copper starts to indicate that we got to watch it closely. It's not saying it's breaking down. It'll break down under 2.95. A long way to go. But this is saying watch copper. That downtrend, remember how important downtrend lines are in my work? I just love using them because in one line, look how simple it is. That's the repellent line. And if I put a Chapman wave inside wedge, inside track reversal zone in, usually that's red. A breakout would be green. Other things are going to happen. So make it simple. Copper has to go to 3.23 to really say, hey, we've turned the corner. We're doing really well. Not doing that right now. Crude oil. Had a couple of questions about the transportation index. It seems to me politics, not aside, but politics involved, is keeping crude oil at above the 9-period moving average. It's at 68.04. It's within a trading band, and it's either going to be a rectangle or an oval, and each one has a different implication. I'm just going to put the oval for now, but the oval breaks down if after this move, that was on the 25th, 67.11 was the low. If 67 is taken out, that becomes a topping formation, and the MACD, which is just good right now, could cross negative, and stochastic, which is just good right now at 80%, could turn down, and the unbalanced volume, which is really good, is turning down in a leg A, B, C. This is a peak D in the unbalanced volume. So I'm watching crude oil, but I don't think it's going to break down. I think there is politics involved, whatever it is, and it's holding very nicely. Now, I want you to do this. Within the context of the different indices, IYT for me has been a very important component. It's not the end of it. I'm not a Dow theorist. I understand it. I've followed it for, I don't know, sounds like forever. I've been hearing people talking about Dow theory. Never, ever understood it, because whenever I heard people saying Dow theory is confirming, Dow theory is confirming, within hours, what is that? Within hours, hope they're fixing up the pothole in the street next door. I mean, outside. Okay. Within hours, the market seems to follow downside if the transports aren't actually confirming. So when they do confirm, you've got to watch, because sometimes it's within hours of a reversal. But in this case, they way down. The IYT is at 188.70. The all-time high was at 206.73, week of January the 19th. That's big stuff. And the XAL, remember we spoke about it yesterday, I had all those questions about the airlines, different airlines. Whoa, a little bounce right now, but I can only treat it as a bounce. It's just a bounce, but it hasn't broken down. If you're looking at the monthly chart at 110.24, up 1.47, over 114.20, I'd be very impressed. Under 107, not impressed at all. I think it's going to go quite a lot lower. All right, so let's get back to the nitty-gritties of the questions. I'll go from the top. So what I wanted to feature this morning is I wanted to say, I think I said it to my subscribers in my opening call. You've got these stocks doing absolutely fantastic pre-market. Amazon, Intel, and there are many others, right? And now Amazon is up 63 at 1,581 towards the low end of the thing. But I said, watch out, the cyclicals are really important. The oldies, the Dow stocks, no, they're not all oldies, but the Dow type stocks are already failing. And look at X, US Steel. One of the reasons why I just avoided it completely for a while now is because I said that tariffs was an artificial prop. to have it run all the way to the 46, 47 area, all-time high, peak D in the weekly, peak E in the monthly. If by what, Monday or Tuesday we don't get to a new all-time high, which is just about impossible, unless there's a takeover, it's at 31.91, a huge move, 15% down. And now you're seeing it. It's another reason why I didn't want to mess with Alcoa, even though they were fantastic moves to the upside. Look at this. It spikes to the 62s and straighting out 51s. So you've got to be real careful when you're talking tariffs and playing stocks just for the tariffs. Now, the other thing I wanted to mention was I've been kind of negative about the defense, airline and defense sector, the PPA, aerospace and defense sector. It did go to a peak, a leg E in the monthly chart with that big pop the other day when what was billions and billions were given. Who's that guy? There were billions and billions. Didn't he just die? Who was in that movie? Billions and billions. Yeah, power shares, aerospace and defense. 56.14 down 77. Goes to a peak, a leg E in the weekly chart, and now pulling back sharply. Let's go through them. Raytheon went to a peak E just a few days ago in the Chapman wave at about 229. It's trading 30 points lower at 203 right now. A leg F in the weekly, a leg F in the monthly. I have to tell you, peace has come. Peace is here. No, being serious. These defense stocks, this is really important. This is saying that at least for a little while to come, there won't be talk of military action. Peak D in GD, which is General Dynamics Defense. I was looking at this just 2 days ago, and I thought, wow, what a perfect short. These defense stocks, and I completely forgot about it. What a perfect short. Look at this peak E in the weekly chart of GD. It goes to the 230. Oh, round number high. 230. Did I miss that or did I miss that? 230 high. Peak D in the daily, hat-trick top. Oh my, look at that. Oh, and a Chapman with 2-bar reversal. Yes, 230 on the 9th of March and 229.95. Chapman with 2-bar reversal at a peak D. What more could you have wanted? Mister, you just missed the most fantastic short. Anyway, this is going to go lower. General Dynamics. Give me another one. Nokia. No, NOK is, no, that's Nokia. No, Lockheed Martin, LOK. LOC. LMT. Lockheed Martin, what does that do? Oh my, look at that. Peak E in the weekly, peak E in the monthly, pulling back sharply down 2%, down 6.53, 323. I have to tell you something. This is good news. Good news says the defense stocks are going down. I'll be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So in looking at those aerospace and defense stocks, Boeing, which is part of that group, although technically it's really in just airlines, is trading down 3 at 339. It made a peak F and has had fantastic news and is holding quite nicely. So I'm differentiating between the defense type stocks and Boeing. Boeing is just a different animal altogether. There is continued buying in Boeing because it's been such an incredible winner. But my thinking is that it's in a big consolidation, and there's a real good chance that over a period of 3 to 4 weeks, if it starts to, it's at 340 right now, if it starts to trade underneath 322, at that point, I think it just starts a quicker descent. May I use the parlance right now? Descent. So next question I had was, so we did that right there. We did X, CLF. You know, I'm going to do this right now because I was going to show it to subscribers. I will, for subscribers, show it over the weekend. There's a stock, and it's CLR. It's Continental Resources. Now, I don't quite remember what they're in, without resources, obviously. Look at the huge move, almost like a one-to-one expansion in the monthly chart, or call it an A to B equals C to D, trading at 65.45, down 39 cents, CLR. Look at this weekly chart, broke out, and everything about it looks more like a new leg B or even a C if it's got an instant restart into continuation pattern. Very positive. The daily chart, and the reason why I wanted to bring this up is years, I always talk about this, years ago, I'm really talking years ago, I'm talking about years and years and years ago, there was a stock called Merck. And if I remember correctly, Merck, I should go back and see if I can find it, was trading in a channel, the narrowest little channel. And it just kept going higher and higher and higher. It's like, it looked like a worm on a tree. You know how you see these little worms on the branch of a tree? And you look, and then you forget about it, and you look again, and now the worm is way up the branch. This is a little worm that's crawling along, using the branch as a platform. And that's exactly it. Look at the platform I've drawn. Look at the narrow channel. I actually prefer this when it's narrow. I've seen them like this, not breaking out of that channel. This is going on since, let's just say from, it's a daily chart, so it's going on from late February. These things can go in a monthly chart like this or a weekly chart. But what's fascinating about it, at every point you think, no, if I buy it now, that's too late. Remember, Apple was like this a little bit at one point, and yet you look back and you say, I could have bought it any day at the very high, and I'd be looking at a huge profit. So I'm going to follow this one. We don't have a position. I'm just going to, right now it looks like it really does want to test and break the key support level around about the 64.50 area. It's at 65.45. But I just want to watch it because these things can last a lot longer than your patience. This is like a rectangle formation on an incline at about a 28, 32 degree, now about a 30-degree incline. So I'm just wanted to mention it because I'm going to spend a little more time over the weekend, show it to subscribers, and discuss it in more technical terms. So next question I had was Ford. You know, I didn't understand. So Ford gaps up yesterday and is holding very nicely. On the weekly chart, this is improving. Has it? Whoa, wait a minute. It'll make C at 11.55 was the high on the 10th. I think today it made a leg D. Yep, leg D. So it's in a leg D in the daily. It's in a leg C now in the weekly after a very quick peak B, modest peak B. Monthly chart still looks terrible. And they've just announced, I believe they've just announced, they need to stop making is that the, what is the Ford car I like very much? The midsize sedan. And so I'm saying to myself, wait a minute, they're going really headlong into the SUVs, and that's really interesting that they're going to break away completely. It's one thing to slow down production, but to actually stop the Taurus and why am I forgetting the name? And their sedan, which is, they finally got it to a point where it's a really good car. Everyone I've ever spoken to who has one loves it. A, B, C, D, E, F, G. I can actually picture it right now. Can't get the name. All right, what's the Ford? And it's the sedan. And General Motors is going to do the same thing. I don't remember which product they're going to do it with. So isn't this interesting? They finally get the cars right, and then they take them off the block. And that's it. To come back to sedans, to build them, it's going to be a huge effort. Well, it's with a T, right? Titanium something. All right. So here we are, a gap up. This is an island reversal to the upside in Ford. So I'm really looking at this, and I keep saying, this is such a mixed market. You've got areas that you would expect at this particular point to be slowing down, and they come out with some pretty good results. That's Ford and General Motors. General Motors also holding pretty well. Not great, it's holding well. So, yeah, it's holding. So I'm watching that, and I'm watching it because I was asked yesterday, so wait a minute. Overall, you think there's going to be retesting going towards the lows that were made in February, but you keep talking about a rotational aspect that might change that. Yes, because I have to trade what we're looking at. And what we're looking at is that as one sector seems to have slowed down, so another sector seems to, or even within the same sector, one stock group is weak and the other stock group is strong. Look at this, advanced micro devices. Advanced micro devices? Look at that. It's at 11.05. Just three days ago, it was in the 9s. So this is what I'm talking about, that within sectors, you've got these sudden rotations, and that uses up time. Let me talk about time. Time is an element in the market that is as important as price. Why? Because sometimes, if you go back to the Dow, the January the 26th high at 26,616, let me just find it right now. Look at the weekly chart. Look how long we've taken. We've taken January was the top. So it's the entire month of February, entire month of March, the entire month of April, and we just stuck in a range, in the lower range, but stuck. We haven't broken down to lower lows. Not only that, the Dow made a lower low below the February the 9th low. None of the indices did. That's kind of impressive. So my contention is that we're using up time. There could be a sudden, huge sell-off for about a week or so, and that could be the climactic low, the real residual low, the aftershock that counts. We've had a lot of little aftershocks. If you're looking at, I had a question that reminded me of something else. Yeah, if you're looking at retail, I mean, who would have thought that from those horrible numbers in December that the RTH could go from under 90 to 97? That's a almost 7% rally in the retail sector when Amazon's just been clobbering everybody. Yeah, you got to be, and it's capped up today. Look at Macy's. Macy's of all people, I was going to say. In leg C, strong leg C in the daily, doing very nicely. MACD is good, stochastic's good in the daily, weekly's improving. I don't know what's going to take Macy's back to the 17s. There could be something that takes it back under the 9-period moving average in the monthly of 27. But boy, I don't know what would take it down that low. So we'll be back for the final segment. One of the things I also wanted to look at, I had a couple of questions about it, and we'll look at it in a moment. In a moment is the euro, and I haven't done the, yeah, I'll be back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
That's right, folks. Stay tuned for Steve. Stay tuned for Dave. Stay tuned for Tom. And don't forget, my opening call, my daily newsletter comes out every single day, not just market days, every single day. And I do the analysis. I give little exercises sometimes. I discuss things. I had a question today, just a moment ago. Actually, I got a whole bunch of things coming in. But the question I need to get to, well, first of all, Al says, is it not crazy that 3/9/2000, March 9th, NASDAQ tops goes down to March the 6th of 2009, and exactly 9 years later, 9 years down, and exactly 9 years later, it makes the top at 3/3 on the 13th of March 2018. I know, I was looking at that the other day because I love symmetry, but I'm not yet calling this a top of anything other than a short-term top. Short to maybe intermediate term. I think it's going to probably be more like intermediate term. But yeah, something to discuss, something to talk about. Next question I had, a subscriber question. Do you ever count a peak and a trough on the same bar like below? You know what? I'm going to answer no, I don't. I do in the futures, but I don't do it in anything else except under certain conditions. I'm going to write that down. Brandon, you sent me the email. I'm going to send you something over the weekend. I hope I can get a chance to do it. Busy weekend, but I hope I get a chance. Or Monday I will do it, but only Chapman Wave Instant Restart can the same bar be the high and the low. Ooh, that's a little difficult. I'll explain to you, but the answer is usually I don't do that. If it has two parallel lows, I'm prepared to think of it as a potential leg A to the upside, but there are only certain conditions. I don't like to break rules. What's the point of rules otherwise? So let me try to deal with that, Brandon. I'll send you an email. So let's just do this. The Dow's now up 12, S&P's up 6. There is not wholesale selling, but what there is that the gap to the upside in the real key stocks that had fabulous earnings yesterday and gapped up overnight and then gapped up this morning, that's the key. If Intel closes 2 days above its high of today, which is 55.79, that's very impressive. My thinking is, at least in the short term, I would not be surprised if Intel has made a little bit of a top here. We'll deal with it on Monday, Tuesday. Hey, check out my opening call. Thanks for being here. Stay tuned for Steve, Dave, and Tom. Have a great weekend. See you back in Monday.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.